What's up, everybody? Okay, now we are talking about hard money loans and hard money lenders. This is a popular topic for a lot of investors, whether or not they should use private money or hard money. And I have my own opinions on it. I personally have not used hard money lenders. If anything, I would consider being a hard money lender or a private money lender because the terms are so favorable for those lenders. So let's jump right into it. What's the definition of a hard money loan or a private loan, essentially? So the definition is essentially um, hard money lenders lend money to people that have a situation like, let's say you're an investor and you're looking at a property, but the property is in such bad condition that a normal bank does not want to give you the money for the loan, or the normal banks that you deal with don't want to give you money for the loan because the house is in such bad condition, and those banks are looking for people that are going to buy a house and live in it, or buy a house that's not in such bad condition, because if you default on the loan, then the bank has to take it over. But a hard money lender will look at those types of scenarios, to give you money until you can either flip the property or get it refinanced after you rehab it. But the thing about hard money loans is that they are expensive. And when I say expensive, they charge you high interest rates for the amount of money that they lend to you for the property. They, of course, get the rights to the property or the title of that property if you default on the loan, of course, just like a regular bank would. They also charge points or fees, and this is basically money for giving you this short-term loan. And the terms also are typically very short. So let me run through my points on my slide, and then I'm going to give you my personal opinion on private money loans or hard money loans. So first of all, they're short-term. They're high interest. So with a regular bank, you might be paying right now 5 or 6%, where with a hard money loan, you might be paying 10 to 20%. And it's usually 10 would be low for a hard money loan. It's usually 20% or even more, just depending on who the person is that's giving you the loan. They are good for fix and flip investors that can't leverage credit with banks. And other people might say they are good for other reasons, but that's typically what it is, because if you can leverage a bank, um, and you have good banking relationships, a lot of times it doesn't make sense to use hard money loans because banks are just cheaper. And with hard money loans, they typically don't give you 100% of the loan amount because that creates more risk for them. They want you to have some skin in the game. And it just depends. Now, sometimes they will give you 100% of the amount of the property or the loan that you need, but not always. It just depends. And hard money lenders are not your typical bank. So you got to search for them. You got to network with people. You got to find people that are willing to do these types of deals. And it's going to cost you. So another thing is additional points and fees, just like I just mentioned earlier. Nothing is really standard because you're talking about private individuals or private investment groups that do these types of loans. So you can't say that it's always going to be the same for every hard money loan. It's just that you're going to be dealing with different organizations that have money to lend, but they want a very favorable return on their investment for dealing with you, right? And you can find them. I'm not an expert on finding and securing hard money loans. I do have some friends of mine that have looked at using hard money loans, and I looked at their proposal sheet and what the rates were and what the loan terms were, and it looked like basically you were basically going to go to work for the hard money lender in order to make them some money, and you may or may not make a profit on your flip because they made so much money off of doing a deal with you. So you got to be real careful looking at all of the terms that they offer you and all of the expenses and costs related to their lending you money, and make sure you can make a profit if you do go that route. Now, one of the main reasons why people use hard money loans or hard money lenders is that they typically are more interested in the deal than they are with your credit history and your background. So, whereas a bank is more interested in your credit history and your background, and a little bit less interested in the property itself, unless it's a wrecked property and they just don't want to do the deal. But a bank is going to look more on your credit history and how your ability to pay the loan back. Whereas a hard money lender, if your credit is bad, they still may do the loan with you, and that's why a lot of people consider using hard money loans because they're looking at do the numbers work out with the deal, and if you don't pay, or yeah, you don't pay them back, then they get the deal. So you basically went and found a deal for them, and they're going to get it. And so if your credit is horrible and you don't know what you're doing, but you brought them a good deal, then you lose and they win. You see what I'm saying? So that's another thing that's an advantage for a hard money lender. Is a lot of times they know real estate, they're investors, they're savvy, and but a lot of times people use them is because they don't have good credit. All right, so I just want to make sure I got that out there and got that clear. But anyway, there's lots of people out there that do hard money loans. You could just do a search on Google for hard money lenders or hard money loans or private money for real estate investing. You know, you could just search that kind of thing, and then there'll be a lot of people to choose from, and you'll have to really investigate. That could be a whole class on how to evaluate, different companies that or different individuals or companies that might do hard money loans because there's just so many people out there that could do it. All right. Now, what you guys actually signed up for when you bought this course is you guys are trusting me and my knowledge to share with you to make good decisions about investing in real estate, and I'm going to give you my opinion on hard money loans. Now, the way for the deals that I've seen, the hard money deals that I've seen, they are very expensive compared to going to a bank to get a loan. Now, some people say a lot of banks won't give you loans for investment properties or fixer uppers because properties that might be distressed. But there's so many banks out there. You can't just go to the first bank and they say no and then quit, because that actually happened to me. I went to some of the big banks and they said no, but I started networking with other investors and I found local smaller banks that would do these deals, and the terms were not bad at all. Like they're banks, they give you the best interest rate they can. They compete, and they will do distressed properties based on their relationship with you and their trust factor with you and your history, your credit history, all that good stuff. Now, what I've seen with hard money lenders is it seems like the only time it makes sense to me for people to even look at that would be if your credit is horrible and you cannot find a co-signer or somebody to go in the deal with you to help finance with a regular bank so you can get favorable, finance rates and that kind of thing, and save money. Worst case scenario, you have nobody to finance the deal. You don't have your own money to finance the deal. You find a private lender, and then you'll have to negotiate with a hard money lender to get the best deal that you can. But from what I've seen, they charge so much money that it's almost like as if you would have a business partner, or as if it's their deal and you're just working for them to try to make a little bit of a profit, but they might make more profit than you do off of that same deal. That's what I've seen. All right, so I'm not really a fan of hard money lending. It's sort of a worst case scenario, and if I did ever have to go that route, I would go for private money from individuals that I knew, like for example, an investor like myself that might not be actively hands-on with a lot of real estate investing, but I might have money to invest in certain projects if you bring me all of the parameters. I look at the property, I look at the numbers, and say, okay, I'm willing to invest in this, because if you fail as the person getting the loan, then the hard money lender takes that property and then they have to finish it. So I would try to find somebody who's experienced with real estate, so that they could recognize a good deal that I bring to them, and then we come to terms on basically a partnership where they're going to get a certain return on their investment by giving me that money, buying the property, then fixing it, flipping it, and then giving them, their money back as well as that return on investment. That's what I would do. But usually, like I said, man, private money lenders and hard money lenders charge so much that you're better off trying to get your credit score up, do what you have to do, maybe find a cosigner to get a loan and do a project that way, and find small local banks to deal with that are comfortable with the local market and the real estate in the local market. All right. So, but that's what, at least you know what hard money loans and hard money lenders are. There's lots of them out there. You just have to be very careful that you know the numbers. You know how much they're charging you when, like in origination fees, like basically when you sign the dotted line, how much money they're guaranteed to get, how much money in interest they're supposed to get every month, how long you have to pay it back, because it might be 6 months and then you got to pay the full amount back. So you better be done with your flip in 6 months and pay them back, or else they might take over the project, or who knows, whatever terms they had. So you got to really look at that contract that they give you as well, because every single one can be different because they're individuals giving out loans. So I don't really recommend hard money, going after hard money or private money unless you know the person or know the organization, and the numbers work out. And that's the most important thing. The numbers work out and the terms are good so that you don't lose. So you got to be real careful with that. I'm more comfortable going to local banks and normal banks basically to get loans and mortgages for my real estate. All right. So that's my synopsis on hard money loans. At least now you know what they are. You know scenarios when a lot of people use them, and my thoughts on them as well. All right. So if you got questions about it, we can talk about it. We can talk about the pros and cons. There may be some people that have had good luck with hard money, and that's great. But you can typically always make more money if you're using a regular bank to finance your deals, because it's just cheaper. So that's what I like. You know what I'm saying? I'm trying to maximize profit when I do a flip, or maximize profit for a rental. And you might not, I don't even think there's a scenario with hard money loans where you would do a rental, so they're for flips. Or you may buy a rental, fix it up, and then refinance it after it's in good condition, because a bank may be more comfortable with giving you the mortgage on a rehabbed property. All right, so you might do that as well, and then pay back that hard money lender when you get the regular mortgage when you refinance. All right, so there it is. That's hard money lending or private money lending. And wake up, got a lot more to learn.